Hi there, welcome to Kneppy Invests. One of the main intentions of me doing this video channel and these videos is to generate and share ideas with you. How you take these ideas is totally up to you. You can completely ignore them, or if you do like something you hear in any of these videos, do your own research on these companies, and then what you do with that research is completely up to you. But the whole point of me doing these videos is to generate ideas for you or just share these ideas. Today's video is to generate and share ideas of 5 companies on the ASX. These 5 companies I'll be featuring in this video all released positive news to the market in the past week. Hence, they are my ASX stocks of the week. A few of these companies I personally do like and am interested in. In fact, one company I have owned in the past. Another company I knew very little about before I did this video. So another benefit of me doing these videos is I do learn about companies on the ASX myself. And sometimes I hope some of that learning I do gain, I can pass that on to you. So let's get stuck into it and look at that first company, which is Atomos. This is a company I've owned in the past. This is a video technology company. Their products enhance content creation. I have actually go to YouTube and just type in Atomos, and there will be quite a few videos that looking at some of the Atomos products and quite a few views. I think there was one video that had over 250,000 views that was done a few years ago. So Atomos is an internationally renowned company. They do have relationships with Apple, Adobe, Sony, Canon, and Panasonic. They have gone through a bit of a hiccup during the COVID-19 financial panic. They released a trading update on June the 30th, quite a positive trading update as well. But when we look at the chart, you'll see that they have released some positive news events over the past 3 or 4 months. And every time they release some positive news, the market seems to sell off on that. And it has may have done the same with this trading update. Expected sales for financial year up to 77 million, a 73% increase on the previous corresponding period, which was COVID-19 affected. However, if we do compare it to financial year 19, we can see it could increase from that non-affected COVID-19. So this company is growing their revenue. They did provide a nice little graph in this trading update. I'll look at that in the next slide. They also gave us some EBITDA. They didn't give us a number here. They just said 9% of revenue. Simple mathematics will show you that's around $7 million. Significant increase on previous year, which is negative 17.5 million. And compared to financial year 19, which was only 1.8 million, you can see a nice little increase from that. Market cap of Atomos is 236 million. That revenue for the trailing 12 months at 44.3 million. Operational cash flow negative for the trailing 12 months. However, in the past half year, they were positive. And those half year results, revenue of 32.8 million, cash of 23.3 million. So had a lot of cash. So enterprise value is near at $200 million because they have very little debt. And operating cash flow positive for the half year of 5.9 million. So definitely possible when they release their full year results, they are going to be highly cash flow positive. Let's get into some little graph they did provide us in this trading update, and I'll show you the cash flow statement, the operating cash flow statement from their half yearly. The graph on the left-hand side is the growth in revenue, or the revenue in half-yearly increments over the past 4 years, starting in financial year 2018. You can see nice, steady growth. They were affected by COVID-19. If this pandemic did not happen, more than likely the revenue in financial year 20 would have been around $62 to $66 million. I'm just having a guess based off the revenue growth over this time period. So Atomos has reverted back to the growth pattern they have been experiencing. No seasonality looks like in the half yearlies. So some companies you will see a bit of seasonality there, no seasonality. And the past half year, 44.2 million, so significant growth in revenues. On the right-hand side, I have included their operating cash flow in the past half year. They are operational cash flow positive by 5.9 million. That is significant. Payments to suppliers and employees have gone down a fair bit. So it does look like they are trying to curb costs. That's one of the things they are doing, curbing costs, and that is going down to the bottom line. They are operational cash flow positive and a little bit more profitable as well. Now onto the chart for Atomos, and this goes back to pre-COVID-19 levels when the share price was around $1.50 to $1.60. Share price fell off a cliff. In fact, it went to a low of just under 30 cents. And just like every other company, seems like in the world, there was a nice recovery in the share price. We did see the share price go from about 30 cents to around $1 in December. Since December of 2020, share price has been going sideways. And whenever the share price gets above about $1.03, we do see some selling. In fact, it's got above $1.03 6 times in the past 6 months. And every single time it gets to that level, it pulls back. Twice, the share price got above that $1.03 of positive news. On the 7th of January, they released a trading update. Share price rose 10%, and then the share price fell off a cliff over the next 3 weeks. In fact, it went all the way down to about 80 cents. On the 15th of February, when they released the half-year results, the share price rose 13% on the back of that. And then 3 weeks later, the share price was down again to around 85 cents. What happens now with this trading update remains to be seen. However, just like the other two, the market reacted very positively to it. Share price rose 11.5% and it moved above that $1.03 sort of resistance zone. So between about $1.03 and $1.13, I would consider that a resistance zone. Every time the share price gets into that zone, there's a bit of selling. Right now, the share price has been in that zone for the past 3 trading days since they released this trading update on the 30th of June. On the Friday, the 2nd of July, the share price lost 4% and moved right, or finished the day right on $1.03. I'm very interested to see what happens in the next few trading days. If we see the share price fall again to say below $1, even below 95 cents, this potential breakout would have failed, unfortunately. However, if we see a bit of a swing up in the share price in the next 3 or 4 trading days, that would be a positive sign that this could be the breakout in the share price for Atomos based off a good financial report or a trading update from the company. And these are the sort of news announcements I want to see from a company for a sustainable breakout in their share price. June 30 may have been an interesting day for Atomos shareholders, but I'm assuming it was even more interesting day for Recon, and really had nothing to do with Recon, this interesting news flow, because it was all about another company and what this other company was doing. Recon itself is not that interesting of a company. They deal with accounting software. And I remember doing research on this company about 8 years ago, and all my focus at that point in time was on Xero. I won't say they're a competing company, but they're very close to being a competitor. At that point in time, 8 years ago, it was fairly obvious that Xero was a company to be in. More than likely, they were going to experience exponential growth in revenue, and Recon would not see much growth, if any at all. And that's exactly what we've seen over the next 8 years after I did that research. The market cap for Recon, 114 million, revenue 75.2 million, which has been dropping off. But they are operational cash flow positive. They are profitable. So what happened on June 30 that was of interest to Recon? It all started early in the trading day when a company called Novartis announced to the market that they had agreed to purchase 15% of Recon, which they called a strategic stake. Then 1 hour later, Recon released an announcement and saying they had no prior notice of this proposed acquisition until the release of this Novartis announcement, which in itself I found interesting. If a company is going to take a 15% stake in another company and they're calling it strategic, you would think there would be some communication between the two companies. In this instance, there wasn't, and that leads me to think potentially, only potentially, this could be the start of a takeover of Recon for Novartis. They are doing a $40 million or $45 million capital raising to acquire this 15% stake. Not all of that money is going towards the acquisition. And in fact, on the 2nd of July, they announced some particulars. They are buying 22.5 million shares at $1 per share, and that 22.5 million shares equates to 19.9% of Recon. So this could be a potential takeover of Recon from Novartis, potentially a hostile takeover because there's been no communication. There is some reason. They did talk about the reasons behind this strategic stake, and it's all about the reliable cash flow that Recon does provide. However, I do think there's some other reasons why Novartis is interested in this company. So how did this announcement affect Recon's share price? You can just imagine if Novartis have announced they're buying 22.5 million shares at $1 per share. That's the sort of share price that Recon should be trading at. Has that happened? Well, let's have a look at the chart right now. Onto the chart for Recon, and this is the weekly chart going back to 2013 when I did some research on this company. Share price at that point in time was around $2.50. And we've just seen a bit of pressure under the share price because this company hasn't been growing. In fact, revenue has been pulling backward. And you can definitely see it with the share price falling from that high of $2.50 when I did the research to a low of around 40 to 45 cents during the COVID-19 financial panic. We have seen a bit of support in the share price. The share price has been consolidating over the past 9 months, and there is a bit of resistance, or there was a bit of resistance, around the 88 to 90 cents, which is that horizontal blue line. It's hit it 3 times, once before the COVID-19 and then twice after. And each 3 times it hit that level, the share price has pulled back until the June 30th, when Novartis took this strategic stake. The share price moved through that level on significant volume. Share price was actually up 22% for the week. And the share price finished the trading week at 98.5 cents, which is about the price you would expect the company or Recon share price to finish, because that is the share price that Novartis have taken their stake in. The other thing this announcement is making me do is it's prompting me to do a little bit more research on Recon. If Novartis is seeing something in this company that I'm missing, and the fact that I haven't done any research on this company for 8 years is another reason. Maybe things have changed in Recon. Maybe they have got new management, they're turning things around. Maybe they're transitioning to a potential growth model for the future. And if that is happening right now with Recon, Novartis has seen that. This could be the breakout in the share price for Recon. Next company I want to talk about is not really a company I'm all that interested in, but just because I'm not interested in this company doesn't mean you don't have to be. So again, this whole point of me doing these videos is to share ideas. And this is another company that released news flow during the week, financial year 21 earnings and trading update on June the 29th, and the market did react quite positively to this news. GTN is, they do broadcast media advertise, or they have a broadcast media advertising platform. They supply traffic info reports to radio stations in Australia, UK, Canada, and Brazil. And from what I read, they are provided with some advertising around these traffic info reports, and then they sell that advertising to companies. I could be completely mistaken, but that's what I did figure out from the research I did, the little research I did. GTN has a market cap of 101 million, revenue of 136 million, and operating cash flow positive of 12 million. So this is a profitable company. It's just the growth trajectory of this company over the next 5 years or so that does give me pause about taking a position in GTN. Expected revenue for the financial year 21, 142 to 144 million, which is down quite a bit from financial year 20, which was 161 million. Expected EBITDA between 13 and 40, which is lower than the previous year as well. And I've included their half-yearly results on the right there, and everything's down from the previous half year. Down 20%, revenue's down 26%, EBITDA down 77%, net profit after tax down 95%. They did mention in this trading update that revenue has increased significantly in the fourth quarter financial year 21 compared to the fourth quarter financial year 20 in all the company's operating regions. Maybe that's why the market did react quite positively to this news. So just because I'm not interested in this company doesn't mean you don't have to be. The market does like something about this earnings and trading update the company released on June the 29th. Now let's have a look at the chart. Now let's have a look at the weekly chart for GTN going back to 2016 when they listed on the ASX. I'm just assuming they listed because when I have charting data going back to mid-2016. So that is an assumption. I could be completely wrong. In the first 6 months, they were on the ASX. Things were actually looking really good for GTN. Share price, in fact, doubled from $2 to a high of about $4. Then we saw a bit of pressure under the GTN share price, and the share price has been falling ever since. I put a blue downsloping line, which is the downtrend. Not a very strong downtrend, but it's definitely there. And that downtrend was broken towards the start of this year when the share price started to consolidate or go sideways. And we did see a potential breakout in about February or March of this year. The share price tried to rise, but that failed. And then on this earnings and trading update on the June the 29th, the share price subsequently rose 50% in 4 days, albeit on not high volume. I would say it's strong volume, but not really high volume. And the share price has got back to the 50-week moving average. So very interesting to see what happens over the next few weeks. If we can see the share price go sideways, not a lot of profit taking, because when a share price rises 50% in 4 days, there will be some profit taking. Some shareholders who have bought in the past year or so will see the opportunity to sell out as well for not a loss. And that would be interesting to see what happens with the share price because of that potential selling pressure. If we do see the share price go sideways, that could be a potential breakout in the share price of GTN. The next company that released some interesting news during the week, although this company didn't release the news, sort of an indirect news release, because another company had the news that affected Atomo Diagnostics. This company, Atomo Diagnostics, is a medical device company supplying rapid diagnostic devices. Last year, around July last year, they agreed with Access Bio to supply them, Access Bio, with rapid diagnostics tests for use in North America. The agreement has evolved over time, and then on June 28th, Access Bio received Emergency Use Authorization, EUA, from the FDA for the point of care of its CareStart COVID test in doctor's offices, hospitals, and ERs. And of course, Atomo and Access Bio will have some discussions regarding their rapid test commercial arrangements, and Atomo will keep the market informed as to any material developments. This was a very handy news release from Atomo because the share price has been under pressure, as you'll be able to see when we look at the chart in the next slide. If we go back to March to June of 2020, you would notice, if you did a little bit of research, that there were very few IPOs on the ASX during that time, maybe 3 or 4, if that. One of those companies that did list on the ASX during that time period was Atomo Diagnostics, because they saw the opportunity, because what they do, rapid diagnostic devices, they thought this was the opportune time to list on the market because of the hype in their business. And we saw the share price get to a high of 60 cents on the day they list. Unfortunately for Atomo Diagnostics and its shareholders who got in during the first few days of their listing, the share price has been generally dropping ever since then. In fact, the share price got to a low of 14 cents the day before the 28th of June when Access Bio released this news about their point of care test being approved from the FDA. Share price rose 40.7% the day of this news release. And the really interesting thing about what happened in subsequent trading days is there was not a lot of selling and the share price did not drop. And that's really interesting for me because you can see the depreciation in the share price leading up to this announcement. And sometimes when you see a share price depreciate like this or fall away like this, it can put a bit of a pressure under the share price because you do have this selling pressure of all these shareholders who have bought in and have seen their holdings drop, or the value of their holdings drop because the share price is dropping. They see the opportunity to sell when the share price rises 41% in 1 day, and that could put some pressure under the share price. It did not for Atomo Diagnostics, which is telling me this is a fairly powerful announcement. If we can see the share price continue to rise up, that could be confirmation that this is a breakout in the share price for Atomo. Final company I want to talk about is Hydrix. I know very little about this company apart from they want to improve 1 billion lives, which seems a fairly ambitious goal to me, but all the more power to them because if they can achieve their goals of improving 1 billion lives, this will become a significant company, not only on the ASX, but in the world. And maybe if they get to that goal, they can try to improve 6 billion lives. That would be another great goal for this company. The other thing I know about Hydrix is they were under another name called Panorama Synergy in November 2013. Share price was about 0.5 cents. This company got a little bit of hype on hot copper, and that hype drove the share price from 0.5 cents to about 25 cents or so in a very short period of time. So good to see you. I think a lot of people had no idea what this company did or did at that point in time. It just shows you what a little bit of hype can do. So don't get caught up in the hype, because the share price then fell off a cliff after that bit of hype in this company. What does Hydrix do? Well, they themselves say they are a product innovation company with 3 divisions: services, medical, and ventures. Seems like when they like that idea, they put their money into the idea. One of their ideas is from a company called Angel Med. They have this device called Guardian, which is a cardiac monitoring device, the world's only implantable device that can alert a person of an impending heart attack. That seems, fairly unique. And on June 28, the Angel Med received USA FDA approval for the Guardian device. What I have found out is Hydrix has a 4.6% equity stake in Angel Med's Guardian, which doesn't seem a lot. They did mention that the market opportunity for the approved Guardian implant is substantial, whatever that means. And Hydrix has exclusive distribution of this Guardian device in Australia, Singapore, Japan, Malaysia, New Zealand, Hong Kong, and Thailand. So not a lot of countries. I think it was 8 countries or so. Market cap $29 million, revenue of 10.4, operational cash flow negative. And when we look at the chart in the next slide, you'll see some very interesting things about the share price movement of Hydrix around, particularly whenever there's news in this Guardian device. With the chart of Hydrix, I just wanted to go back to a year and include some interesting news flow from the company on August the 17th in regards to the first Angel Med Guardian device being implanted in the Asia Pacific region. The market absolutely loved this announcement. Share price rose 260% on August the 17th, and that excitement flowed through to the next day, August the 18th, when the share price rose another 75%. In fact, at one point in the day, the share price got to a high of 81 cents before drifting back and closing at 55 cents. And ever since that day, the share price has been drifting lower. So what's happened, all those people who got caught up in the hype, bought at Hydrix at, say, 55 cents, 60 cents, had just seen the share price drifting lower. They become bored in Hydrix, and they're just waiting for the next pop-up in the share price, and that will give them the opportunity to sell out of Hydrix. And that's exactly what's happened on the 28th of June when the FDA approved the Angel Med Guardian in the United States. The share price at one point in time on the 28th of June had increased 90%. And I think a lot of these shareholders saw the opportunity to sell out. And that's why the share price has been under pressure after that. In fact, the share price has gone from 28 cents to a current share price of 18 cents. And we've seen the share price just drift lower each day, with all these shareholders who had bought into Hydrix in the past have seen the opportunity to sell out. The last trading day, we have seen that selling pressure come to an end. Right now could be a time to buy into Hydrix around 18 cents. Selling pressure has been exhausted, and the share price has finished or closed right on the 50-day moving average. This could be the time to buy into Hydrix if you like what this company is doing. That is it for this video of my 5 ASX stocks of the week. If you have any questions about these 5 companies or any other company on the ASX, please leave a question or comment in the comment section of this video. I'll answer anything you have to say in the next week or so. Sometimes I'm a little bit tardy just because I am doing other work. And the last thing I should say is I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.